I mean, it was 27 winning days in a row at peak before I lost it. You shouldn't be trying to swing for the fences because this one trade today isn't gonna make or break you. You can't take a payout after one giant trade. You need to do
Yeah.
it consistently.
And people are like, "Oh, 400 is not enough money for me to take my
Mhm.
profits here." And I'm like, "That's if you do that consistently, that's probably more than you make in your current job."
You were willing to give up 8 hours of your life to make that, but now when you make it in an hour, you don't wanna just go enjoy the rest of your day, 7 hours
Yeah.
off of work. So it really
Yeah.
doesn't make sense.
What's up, guys? My name is Andre. I'm the CEO of Edgeful, and I have Evan here with me today. We're going to talk about his trading, how he got into trading, how he uses Edgeful. He's a sick trader, went on an unbelievable win streak a few weeks ago, maybe like a month ago now. We're going to talk about that. Evan, how are you, man?
Good, man. How are you?
Good, good. Thanks for being here. I appreciate it. It's always nice to talk to great traders. I just want to start out by kind of understanding a little bit about your background. Like, how did you get into trading?
So getting into trading, I was still in college, my first year of college, and honestly, I wish I had a better answer. I don't know how I like found out what trading is, what it could do. I don't know. It had to been like probably a YouTube ad of some sort, but like slowly started researching more into it. I mean, it's drastically different than like the things I do now are not what I first learned, obviously for most people
Yeah,
probably, but getting into it was probably about 6 years ago now.
nice.
Um and then, like, the first year was probably, like, a waste of time of, like, just doing minimal research. I wasn't, like, actually trading. I was just like, "Oh, that's an interesting thing. I'll just research it every now and then."
Yeah,
But then, yeah, I traded through college, and then once I graduated, I was fortunate enough to be able to trade full time because I started
yeah,
so early, so definitely blessed for that.
yeah, that's awesome. And what did you trade? Like, what like clicked? Was it like
Oh,
options, forex?
what did I trade or what clicked? Because those are different answers. At first, I
Both.
traded on I traded CFDs, Forex didn't click, but it could be a mix of Forex, but also just so
Yeah,
new. I mean, like, you coulda gave me futures, you coulda given me anything at that time, and I wasn't gonna
yeah,
trade it well. So, thankfully, just more experience through the years, then gravitated towards futures, and then it started to click even more of like, well, now I
yeah,
have enough years underneath my belt, plus I like the futures as well. So, I mean, that was just like a perfect harmony there. But yeah, I
yeah,
did everything. I traded a little bit of oil, metals, CFDs, obviously, of like the forex side of things, and then I think just the biggest thing was like the futures of. I'm really just watching ES and NQ.
yeah,
That on the forex side of things, I'm watching like 8 pairs, trying to figure out which one do I like best today, and it truthfully wasn't even like trending nicely, but this is my watch list, and I
yeah,
do whatever I need to do. So I mean, just the simplicity of futures, 1 to 2 assets, the trending volatility of it, and then yeah, the VWAP and all that, which we'll probably
yeah,
touch on. But
of
yeah, it was
course.
definitely a mix of like whatever I traded back then, almost like irrelevant because I was just so new. But thankfully, I did find futures when I did because it was a good time.
Yeah. And do you prefer having a smaller watch list? Like, do you have gold and oil and some of the metals on your watch list, or simply
No,
ES and NQ?
not anymore. I just trade ES and NQ. I mean, I'll watch list the Mag 7, but I don't actively
Yeah,
trade them, and it's very minimal, like, watching them in terms of analysis. It's just really just to get a directional bias to make sure they're all running in sync the best we can.
yeah,
But, yeah, the simpler the better because I feel more in tune of what's been happening this week on it. I don't have to keep track of what did each pair or what did all 4 of these assets do.
for
Some went
sure.
up, some went down. So, I know this week, the indices have been going up. Monday, Tuesday, Wednesday was sideways. Like, I just feel like I'm always following the story. I'm not distracted with all the other noise.
Yeah. I definitely agree. I used to trade Tesla options, and I would look at Tesla, I'd look at SPY, I would look at QQQ, and I'd kind of dance around each of them. Now, it's not really that big of a watch list. Like, I know people that will trade like 15 different assets, which I think is insane
Yeah,
personally. But um, when I started to trade Tesla options, like I realized that if you have a one or two things that you want to look at, you get familiar with how they actually work, and then from there you can execute on it so much better because you're like, okay, I kind of know how it moves, and it's really hard to quantify, which is kind of weird, but it's hard to quantify that you learn the personality of like some of these things and how they like to move and what the wicks are and like where you're like if this is going to be a fake out, and that only comes with time obviously. But when I boiled it down to spot, so I I first started trading SPY options exclusively, and then
Mhm.
I started trading futures actually more recently. Um, but the futures like ES, I think was for me a great place to get started, and then NQ was like is a wild animal. Like I I trade NQ now, but NQ when I started was very difficult to trade because I never understood how wide the stops really had to be, just because it's like it moves so quickly. But
Yeah.
um, so I know you like prop firms now, right?
Mhm. Yeah.
How do you what do you think about the different rules that come with the prop firms? Like, do you like the rules? Do you think it helps you with your discipline? Do you not like the rules? I've heard differing opinions on it, and like I have my thoughts, but I'm curious on yours.
Yeah, I mean, there's plenty of different thoughts, and each firm's gonna be a little bit different. I'd say maybe the one rule which I don't like, I know for sure, would be like the intraday trailing drawdown, just making it very tough to, you could be floating up $500, comes back, and you really lost 500, even though you didn't make any money on the trade. So like that's just
Yeah,
tough for people that want to maybe hold their trades even just a little bit longer. Not even
yeah,
calling the top, but I know that's very difficult to try to scale.
mhm,
For me personally, where I'm not even like a big trader in terms of risk reward. I'm getting like a little bit over 1R. So
yeah,
I can't even really imagine if I was trying to stretch it to like a 3R move, holding through those ebbs and flows and potentially like
yeah,
giving back profits on your account, but even though you didn't actually lose. So that one there, the consistency rule, I know a lot of people have like different opinions on that. It's
yeah,
trader to trader. I mean, I feel like for the beginner trader or even just an intermediate trader, it is more so beneficial than they'll probably want to admit because it just keeps them less greedy of you shouldn't be trying to swing for the fences because this one trade today isn't going to make or break you. You can't take a payout after one giant trade. You need to do
yeah,
it consistently. You need to
for
prove
sure.
yourself. So if I'm up 1,000 on the day, I'm more likely to call it there than try to make 5,000 because, well, then
Yeah,
I gotta probably make 5,000 again on average
yeah,
tomorrow and the next day. So it's really like, well, can you consistently put up that kind of big number? If
yeah,
not, then you really shouldn't be trying to stretch for it because it could just instill bad habits of trying to be greedy, sizing up. So I
yeah,
think like I said, the intermediate trader that's very prone to being greedy and over trading, it really limits you and stops you or gives you incentives to. Because if you go past the consistency rule by trying to have a big trade, you're really just pushing your payout down the line. So you're
yeah,
just making it more difficult for yourself later on. It's going to
yeah,
look like a nice win today, but now it's going to be harder to take the rest of that payout. So I think it's beneficial in that regard. I know a lot of people are
yeah,
like, well, I feel like I know how to trade, so I want to be able to make a big nut sometimes, but then
yeah,
sometimes it's going to be smaller. So I can see that side of it, but again, you're not going to please everybody. So I think for the majority, it's a safe rule to put in place just to show
for sure.
consistency. That's why I showed a consistency rule. You shouldn't really have a problem with it if you can trade consistently.
Yeah. And speaking about consistency and kind of like batting for singles and doubles, I know you went on a crazy run. I'd love to hear about how that kind of started. I know you had just released a course, and from that course, I guess like you must have revisited some of the lessons that you've put in there. Like, tell me about that run that you had, and how long was it from like
So,
start to end?
I mean, it was 27 winning days in a row at peak before I lost it. Obviously, there was losing trades within there, but like daily
Yeah,
finish, I recovered green 27 straight days.
crazy.
But I would probably give most of that to even me building the course that I did because
Yeah,
it took obviously hours and weeks and days to make and put together. So I was looking at thousands of markups, choosing what's going to be in the course, what's not going to be, and it just wired these setups over and over in my head that I knew exactly what I was looking for because I just
yeah,
released what's good, what's bad, what I don't want to take. So like that was probably super beneficial more than I thought. And like when I was
yeah,
trading well, I'm like, yeah, it's just a nice streak. I was like, well, I did actually just go study everything you possibly could imagine about my setup. So that probably is helping me avoid some of the worst ones that I normally would take or
yeah,
be content with how much winners there actually are because I just saw 1,000 of them in my markup.
yeah,
So like I don't need to be fearful of missing this next one because I know if anyone knows it would be me on this setup that there's plenty of winners around the corner. Okay, cool. So I could be calm.
yeah,
I don't need to chase this one. So it definitely did play a big part in it. But yeah, it was just base hits, 1 to 2 trades a day. It was all on copied accounts. So that also we could speak on that a little bit of like
yeah,
copying the accounts together helped me personally just because if I made $500, I really made 1,500 because I was on 3 accounts. So like
yeah,
okay, if I'm up $1,500 today, yeah, I'll call it there. But if I'm risking like
yeah,
smaller size on one account, it's everyone's not ego, but just what they want to make. If I only made 200 this morning on one trade, one account, that's not enough. I want to keep
Yeah,
on trading. So they're going to keep on trading. But if I'm on copied
yeah,
accounts and doing comfortable risk for myself, well then I made enough. So I'm going to call it. I'm done. I'm content with
100%.
what I made, but a lot of people just aren't content with how much they want to make or expect to make. So they just keep on trading. They're not trading the chart at that point. They're just trading the P&L. So it's
Yeah,
like I really don't need to swing much. This is going to many accounts with good size. If I make one trade a day, I'm gonna make 1,500. If I just do that
yeah.
27 days in a row, I think I'll be fine. So it's really
Yeah,
like having that long term focus of like I'm playing for the end of the month. I'm just trying to have good days. They're gonna
yeah,
ebb and flow in terms of size, but check back in with me at the end of the month and see what I did. You know?
yeah. And something that I feel like a lot of new traders just don't think about is 400 bucks a day. Like, if you were to make $400 a day over the course of the entire year, that's $100,000. And people are like, "Oh, 400 is not enough money for me to take my
Hmm.
profits here." And I'm like, "That's if you do that consistently, that's probably more than you make in your current job."
I love
Like,
to say of
w
like yesterday I made like 1,500. I don't
yeah.
even know the time on it, but whatever it was, it's like some people are gonna spend 8 hours in a cubicle hating their job for, let's say, 300 bucks and be like, "Yeah, that's
Yeah,
good. Like, pay me 300, I'll sit here for 8 hours and do this job
yeah,
for you guys." And they're fine with that. They
yeah,
come into trading, obviously try to escape that because they don't like it. So when they
yeah,
get to trading and they make 300 in 20 minutes, they're like, "Nah, that's not enough." It's like,
yeah.
you were willing to give up 8 hours of your life to make that, but now when you make it in an hour, you don't wanna just go enjoy the rest of your day, 7 hours
Yeah,
off of work. So it really
yeah.
doesn't make sense. People get into trading saying one thing and then they just stick around and end up trading just as long as they would if they had a 9 to 5.
And the worst part about that is typically the longer you stick around, like, you're probably gonna it's not your P&L as you stay throughout the day usually does not continue to go up. It
Yep.
usually starts to go down the
Yep.
longer you're around, and, like, especially if you have a bad start to the morning, and then now you're trying to fight back, and now you wanna make your money back. You wanna like, "Okay, I just wanna be break even on the day." Now you get back to break even, you're like, "Okay, I'll make a little bit of profit." Now you start to be in profit, now you start to lose your profit, and
Yeah. It
it's a
very
lot of
quickly snowballs.
psychology.
Yeah.
Yeah, it's a lot of psychology, but one of the things that I've found just talking to the edgeful users is the confidence that you get from having data-backed targets, data-backed bias, and just, like, saying, "You know what? I know that in the last X amount of time, prices retraced to this point 78% of the time. So when I'm taking a trade targeting that point, if I'm sitting in a consolidation where normally I would get out, now I'm holding on to that winner. I'm holding on to that trade and letting it really play out so my winners can actually be bigger than the losers."
Yeah.
And that confidence that you get is something that you really only get after a certain amount of time trading, and then also when you have something to back what your like your the idea of like your trade idea.
Yeah.
And I know there's a couple of reports that you use on Edgeful. I'm curious, like, what are they? And yeah, just like what are they?
Yeah.
And have they shifted at all over
Yeah, so, like,
time?
on the 27-day streak and just any of the trading regardless, like, it was very heavily like, I was going for the midnight price or even,
Yeah,
fading it, if you wanna say. If it was, like, a low
yeah,
probability of that ICT opening retracement report of,
yeah,
like it was very much so like you just said, of, like, I'm using my strategy. I'm playing bounces off VWAPs, breakouts of VWAPs, but I have a clear target in mind that it probably
yeah,
wants to go up there 72, 50, like, 80% of the time. As my target or even extra compliments of, like, I know I wanna buy it here because of my own reasons,
yeah,
and it's even telling me even more so that this probably wants to go higher to at least this level, that this
yeah,
report. So I should really stick in this trade and really want to see it through and not be feared out of it. Like, oh, I'm on the wrong side. This isn't moving. It's like, well, I'm playing a good probability. That's all I can do. I can
yeah,
mix my discretion in there the best I can, but I'm just playing a good probability. Because there was like
yeah,
one time I played like a 90% probability. Maybe it was the double break stat of the initial balance
yeah,
and like it double broke. It's like, am I gonna be mad at myself that I followed a not something that happens 90% of the time? I just got the one time out of 10 that it doesn't. It
yeah,
sucks. But if
yeah, it
I
does.
keep playing that report again tomorrow, it's likely that it doesn't double break again tomorrow. So okay, I'll be on the right side of it then. But yeah, I love the ICT opening retracement. Like I just said, the initial balance playing for the single break. Sometimes I go to trade to go even go get that first break of it.
Yeah,
That one's maybe not as stats driven. All I know with that is we're gonna probably break out of this initial balance today, and I try to maybe
yeah,
sometimes time when that's going to happen. But other than that, once it does break aside, then I'm really following that one side to
Yeah,
play the stronger report of like it probably doesn't double break. Like
yeah,
80% of the time, it's gonna only break one side. So I really like to play that side of it as well.
yeah. One thing, if you wanna after this, just check out the IB by rejection report.
Okay.
Pretty much what it does is it checks based on the the sequence in which it forms. So if the low formed first, what's the
Mhm.
probability that the high will break out first? So it's looking
Yes.
for that first breakout. So if it's something you want to add as just a confluence
Yeah.
to say if the low formed first, now the stats are obviously different for each contract, but if the low formed first, maybe the high is more likely to break out first. So if the IB high forms, pulls
Yeah.
back, now you can get long targeting that
And that's
break,
for,
which
open range too, right? Similar?
yep,
Yeah,
yep,
because we
yep,
had some guy on
exactly.
stream say that of, like, he's in long because of X, Y, and Z, and we also
Correct.
clearly set the low first that we and it makes sense of, like, if we started lower, we went higher,
Yeah,
it's more likely we break the upside next because 'cause we're so
of
close to
course,
it. But, yeah,
for
there is
sure.
that chance it comes all the way back down, but I do like that side of the report as well.
Yeah. The just to touch on what you were saying about if this happens 90% of the time and you're in the losing time, like universally that sucks. Like universally, I like even for me, like I get upset. I'm like, are you kidding me? Like I cannot believe this didn't work. And that's been happening with the gap fill a little bit more recently, where the gap fill, it's something that I love. I'm not sure if you use it too much,
Yeah,
but
yeah.
the the smallest gaps recently have just not been filling or just like dumping so heavily before they come up to fill.
Mhm.
And it's been so difficult to trade them
Yeah.
because the probabilities are showing that they're high, but it's just like in the last week, I think it happened is like a no brainer trade just like didn't work. And then I was just like, come on, like, how did this not work? And I just reminded myself, like, this is just one out of the 10. And
Yeah.
if I show up to take all the like, quote unquote, like take all the shots, I'm going to be in a good spot by the end of the next 10 trades. And
Yeah.
that's an important piece just in terms of like your risk management too, of like, you can't be risking your whole account or half of your account on a single trade. You have to
Yep.
be careful about this could be the loser, even if it's an A plus setup. Like every A plus setup also has losers.
Yeah, and there was, like,
It's
one report where it's like you get easily consumed by that because it's like, okay, there's an 80% chance this happens, so a 20% chance it doesn't happen. And it's like, well, you look at the stats, and you're like, it is 30 out of the last 150 days, though. So it did happen 30 times. That,
yeah,
like, that's not insignificant. It's a low probability because there was 120 days where it didn't. But it's like,
yeah,
okay, I caught myself on one of the 30 days. It's not like it
yeah,
went only one out of the last 100 days did this happen and you were on the wrong side of it.
yeah,
That's tough probabilities of like, of
yeah,
all days, I got that one. But
yeah,
it's
yeah,
like, no, it
exactly.
happened 30 times in the last 6 months or 9 months in a year. So it's like, it's going to happen, but it's just like very low probability. So you just never know
Yeah,
what day is going to be what.
yeah, and it's just that's just the way it is. And what's so interesting is how I mean the market has been changing a lot
Yeah.
recently for whatever political reasons, for whatever else. I mean, there's a million reasons why the markets shift, but I'm curious, like, how do you go about because you've been trading for a pretty decent amount of time now. Obviously, when you started out, there was a like trading. It was like a different definition. Every
Yeah.
new trader in like their first 6 months or first year is like you think you're trading and like not really. But how do you go about like understanding how the market shifts? And do you like how do you go about adapting and like identifying the changes and kind of like tinkering things? Like do you size down? Do you pull your stops in close or your targets in closer to just kind of get that confidence? Like how do you deal with that?
Yeah, for sure. It's really just you got to adapt and evolve with it, even if it's just not long term. Okay, might be for the next month. These breakouts aren't going to run as far or move as quickly. Okay, so I just got to adapt to that in the short term until I start seeing what I want to see or I was
Yeah.
used to seeing happening more often again. All right, then I'll maybe go back to thinking that. But you have to take in again. That's the same thing with like following one asset. I know exactly how it's been moving the past month. Where if I was stretched out, I'd be like, oh, forget what. How has that asset been moving? Like every month, but I think just
Yeah.
watching ES, it's like I know how it probably has been moving as of late. So I am going to switch up my trading a little bit of breakouts. Let's just say a lower day VWAP haven't been running like I expect them to. So I'm more inclined to want to get in earlier than that for like a bounce play, get a better price so that I could get out before I even expect it to break out because it's probably not going to. I
Yeah.
could just switch my targets around of be willing to get in a little bit earlier or tighten the stops or even widen the stops sometimes just to give it more room to play out because it's
Yeah.
not moving on your time or maximizing my trading like in the first hour and a half or so of the day. So I don't need to worry about is this afternoon going to hold this trend or is it going to just turn into a chop fest and the trend was really in the first hour because there was
Yeah.
a lot of that of like we moved 60 points at the open and then we just stay within that range for the rest of the day. It's like, dang, you would expect us to have another leg lower and then maybe another leg lower, but it was like, no,
Yeah.
there was one. And then it just traded within the range all day. So I don't really want to be chasing breakouts later on in the day because they're not breaking out anymore,
Yeah.
more so than not, in
Yeah.
my opinion. So it's like, okay, so I really want to get a much better price. So I don't even need it to break out and I could still make money. And then
Yeah.
if it starts to break out more and more, I mean, we've had some nice trending days, obviously, yesterday before the
Yeah.
afternoon dumped. Like it was nice trend continuation. You could find longs all day. Okay, cool. So if I keep seeing that more and more times than not, I think I'll be more comfortable to expect trend and nice long moves or short moves in the afternoon.
Yeah.
But yeah, you got to evolve with it.
For sure. And I'm curious about, just to kind of shift over to the emotional side, I'm curious about how you deal with tilt and FOMO and greed. So I in the there's a book called The Mental Game of Trading by Jared Tendler, and
Yeah,
one thing that he talks about is if you can identify the things that trigger those emotions, then you can stop yourself from actually feeling that emotion, or not necessarily stop yourself from feeling it, but prevent yourself from taking a
yeah, you
trade
can
that's going to
catch
ruin
yourself.
your account.
Yeah.
Um, I'm curious, like, is there anything off the top of your head that you're like, every time this thing happens, I will tilt, or every time this thing happens, I'm going to chase a trade, or anything like that?
Yeah, I mean, it's normally like if you look at any of my tilt days, they don't fortunately they don't happen very often as much as they
Yeah,
used to. It's really like on the slow days of like I just took 6 trades and we moved like 10 points somehow. Like I went
yeah,
long, short, long, like nothing's happened though. It's not like I
yeah,
got burnt out by trying to force a direction all day long. My tilts are like 20 minutes, but I blew myself up in that short amount of time. Like no one's on tilt in
yeah,
my opinion, like all day. It's just like you go
yeah,
so fast and then it's over with. And you're like, well, my account's gone.
yeah.
Because it's all about if you just pull yourself off the desk, oh, you could save yourself so much.
Oh yeah,
But yeah, I would say on the slower markets of like trying to get that to not be slow. Like, let's move it. Let's pop out of here somehow. And just switching directions. Whenever I switch directions, I'm probably not in a good headspace. If I switch it very quickly, multiple times. I shouldn't be long,
yeah.
short, and long. There's usually not that much new information in that short amount of time to really sway my bias of like, but 2 minutes ago
That's
you
a
were
great
long
point.
bias. Now you're short bias. Okay,
That's a great
now
point.
I'm long bias again. It's like there can't possibly be that much information swaying me, or else those first biases weren't strong to begin with. So I
Yeah,
think it's recognizing of like, am I forcing what I want to see, or is it like showing me what I want, and I should just
yeah,
be listening to it. But a lot of
yeah.
times
That's
the tilt is just like you're telling yourself things that you want to see, so you're giving yourself a reason to take it, backing it up.
yeah. That's such a good point that there's not any more information to switch your bot to switch just because like right now you're directionally wrong. It doesn't mean like you shouldn't be like flipping like flip
Yeah.
flopping back and forth. That's such a great point. I've
I
never
moved 8 points,
never
and I
thought
was
about it
just
like that.
long bias 5 minutes ago. Okay, it's moving down a little bit, so I'm short bias. It's like, well, clearly it wasn't a very strong long bias then if you're
Yeah,
that quickly short bias, and then back to the longs and so forth.
yeah,
So, yeah, it's really just well, that's how I know I'm off tilt. And one thing going back to, like, that streak I had, obviously it was very great, but then once it snapped, it was, like, kind of freeing. Like, I didn't love the streak because it put a lot of pressure on myself of, like,
yeah.
keeping this
Continue. Yeah,
perfection, if you will. So it was like I feel like I'm missing some trades now because I don't want to lose more than ever. That I'm less likely to take that or be a little bit more risky and it helped me obviously, but it also wasn't maximizing my P&L, I would say
yeah,
towards the back half of the days because like when it was at 14 days, I was like, okay, cool, yeah, whatever. Then once it crept into like the 20s, I was like, oh, okay, like let's keep it now. Let's see how far we can get it.
yeah,
But it was, like, freeing after, but short term, right after it snapped, it was a little dangerous. I was like, "Alright, I'm free. I could do whatever I want now." But
yeah,
and that was not good, where it was
yeah,
like, now I have 3 trades a day. Now I am playing both sides of the market, where I was very disciplined, patient, one setup, I was like a robot for those days, and it was good on the streak, obviously making me the money, but then once it snapped, I let myself be too free. I let all the guardrails gone,
Yeah.
and I survived, but it was like, well, that was definitely not happening, like, 2 months the past 2 months, why is it more likely happening now? Well, it's because
Yeah.
now I'm giving myself a break of like, "Yeah, you earned this. You can do whatever you want. You earned it. Look at that streak you just put up."
Yeah.
Not the case. You still the reason I had that streak is because I was doing things good. So I would
Yeah.
still wanna do those
100%.
things good now. It wasn't like, "Alright, the streak's gone. I can change the way I trade now." It's like, no.
How did you deal with, like, so, I understand the pressure piece of, like, not only are you I mean, obviously, you're trading for yourself, but you trade in front of a bunch of people too. So, like, to maintain that streak publicly is one thing, but how do you deal with the confidence aspect? Like, not to say, like, I'm bulletproof or whatever, like, anything I do like, anything I do will just be green because, like,
Mhm.
eventually you start to think to yourself, I mean, at least when I go on a streak, I'm like, "Oh, I have a feel for the market." Like, I know what's gonna like, like, in the back of your head, there's this little voice
Yeah.
that's like, "Oh, I know what's gonna happen." Like, "Oh, this is gonna happen. It's gonna come up here. I'm gonna short it. It's gonna continue down." And, like, when that actually plays out the way that it is in your head, it gets a little bit sketchy sometimes because you're like you start to take risks that are not like,
Yeah.
that you would never normally do. So
Yeah.
how did you deal with the confidence there?
You're in flow with the market. You feel like, "I'm reading this really well. I've been reading it really well. So, like, chances are my read here is probably correct. So I should get
Exactly.
in," you know? So the confidence wise, yeah, I mean, like you said, it's because I was trading in front of people that's the only reason the streak had any pressure. I mean, if it was by myself, when there's no pressure. If I snap it, no one would know. So it's really
Yeah.
just trading in front of people, but it was really just like a knowing it's going to end, obviously. So it's like, well, whether it's 27 days or it stopped at 22 or it got to 30,
Yeah.
no difference. So it's like if I take this next trade and it does lose, so be it. It's not like, oh, now I lost like this challenge, this competition. Like I don't get rewarded for having a 27-day streak or 28. Obviously, I didn't lose money, but
Yeah.
like whether I push it to 30, it's like who cares? Like
Yeah.
nothing different happens. Because like I said, towards those back half of the days, it wasn't necessarily like maximizing gains of like, well, I'd rather have like no streak and make like 20 grand than I kept this perfect streak and I made 10 because I
Yeah.
sized down, I missed some
100%.
trades. It's like, well, that's not very like optimizing your trading of like, yeah, you had a streak, it looks all pretty and green, but you could have made more money. So
Yeah.
once I just let that go, I'm like, I and towards the back half, I was like, I kind of want it to end so that I can just get back to trading. And then
Yeah.
I ate my own words of like, okay, now I'm a little bit too loose. I'm like a loose cannon here.
Yeah.
Maybe that streak was protecting me and keeping me picky with it. So it's a balance of like I obviously have confidence in the setups because it's been working, but I also know this has been working. So I still need to do what has been working. I can't go outside of that and expect the same results of that I've been getting.
Yeah. And when you say this, that's I know you use VWAP. I know you use the edgeful ICT opening retracement. What else do you look at? Like, in terms of whether it's reports, whether it's structure, whether it's like whatever else. Like, what is this?
Yeah, so I'm using the 15-minute for like just directional trend. I use like a daily view up or a changeover of day VWAP from the changeover of day to be like my
Yeah.
last like line in the sand. If we're below it, I'm looking for shorts. If we're above it, longs. If
Yeah.
ideally I want to be like in and around at that price of that VWAP, but then on the 1 minute with the lower time frames, it's just trying to continuation or like a bounce play off of a VWAP or a break out from a VWAP. So it's really just simply, it's trend continuation, following the timing to get in with these VWAPs that I'm using.
Yeah.
Like you spoke about in the Futures 2.0 course, like it's just all about trend and continuation with the VWAP. You could try to play the ranging markets, but it's not really built for that. Because like I mentioned to it earlier, the break of a low a day VWAP, let's just say. It's for a breakout. If you break out for a new low a day, you'll make money. But for ranging and there's no breakouts happening, there's no new low a day, then how can you expect to make money with this breakout strategy?
Yeah.
So it's like, okay, the strategy is not broken. We're just not breaking out. So like I can't
Yeah.
expect it to move how I want it to if there's no new low a day made. So it's like not like the
100%.
strategy's broken. It's just more so of like, okay, it's not trending today, so I can't expect the same results just because it's breaking this VWAP doesn't mean it's going to run for a new low a day because it's not
Yeah.
trending. So it's like
100%.
knowing what the market conditions are. I can't just close my eyes and take every single VWAP break and expect to see the same P&L. It's like if it's
Yeah.
trending, yeah, it'd be a lot better off than if we're ranging. If you're in a range, you got to
Yeah.
play it differently.
Yeah. Yeah, and just identifying those different conditions is so important because like, yeah, it could be you could be in a trending market and then one day is range bound and then now it's not like the market has shifted. So you still
Right.
it's such a it's a little bit of a dance where you need to figure out what's like is the market actually shifting? And one of the honestly like one of the ways that I like to see has the market changed is to play with the date ranges on the reports, on the edgeful
Mm.
reports. So
Yeah.
going to the last month, to the last 3 months, to the last 6 months, and seeing like, is there a pretty big difference here between the most recent month or the last 3 months versus like the last year? Like some of the reports are honestly like like night and day different when you
Yeah.
look from the
For
last
sure.
3 months to the last year. And to me, it's like one of the easiest ways to identify like what's actually changing because then I'm like,
Yeah.
oh, the gap hasn't been filling in the last 3 months,
Yep.
which like people think that's like people think it's not enough time to backtest. But like if you think about 3 months of trading, it's 60 days, 60 trading days. Like
Mhm.
that's a lot. It's a lot of days.
Yeah.
So
Yeah, I mean, I think I
it's
remember it
definitely
last
more than enough.
we're almost there again, and now that it's almost spring, but it was last summer coming off the tail end of it. I was playing very heavily, like, the double break of opening range. It was almost like,
Correct.
"It's happening today," like, in the next couple
Yeah.
minutes. And, uh, and then it started slowing down in the fall, let's just pretend. It's like, okay, well, you could still follow that of like, well, the stat's worth 70% chance of double breaking, but now we could
Yeah.
see we're not like guessing of like, oh, why isn't it working as much? You're like, well, the stats say now it's like 55. So you just
Yeah.
evolve with that. Same thing with the
Yeah.
initial balance.
Exactly.
It's like the initial balance double break was like, let's just say 15%. And then we're seeing it a few more times. It's not like, oh wow, like do I just still pretend it's 80% of the time? It's like, well, no, go check. Now that it's been happening
Exactly.
more and more the past month, it's never gonna be probable if I had to
Yeah.
guess. It's probably just like, oh, 30% of the time it double breaks. So still not
Yeah.
likely, but you're gonna see it twice as much as you're used to.
Yeah.
So don't like completely like wash it out of like, no way this happens. It happens like one every 20 days. It's like, no, it might
Yeah.
change to like 3 out of 20 or 5 out of 20. And so you just put a little extra guardrails of you could definitely see this happen. So I really need extra confirmation with my strategy to believe it, because that's also the good part about it of like you need your own strategy anyways. So like if
Yeah.
the market's telling you to get in and you're using this edgeful report with some extra confidence and confluence, all right, well then yeah, you're still playing like a good trade regardless of what ends up happening because you can control what you can. You can't know if today's going to be that 5 out of 20
Exactly.
day or the 15 out of 20 times that it does happen. So
Exactly.
you could sleep at night knowing you played what you were supposed to.
Yeah. No, 100%. So, one last question before we wrap it up. Is there any piece of advice that you wanted to that you, if you can go back to the beginning to
Mm.
like your first year trader that you would give yourself, you can say, "Hey, you can do this," like knowing what you know now.
Yeah, probably just be slow down everything, but slow down your expectations of like how long or how short it's going to take for you to find consistent success. I
Yeah.
do believe anyone can do it quicker than I did because again, I didn't have the resources that many people that now do have. I didn't have these reports. I didn't have other streams that I was watching. Like I was pretty much just on an island on my own researching stuff. Who do I believe? What do I need to know? What do I not
Yeah.
need to know? That like if you can get around a good community and just people that want to teach you and want to help you and you can see them do it, then of course you could definitely do it quicker. You don't need to be like watching this and be like, oh damn, it took them like 3 years. I don't want to wait 3 years. It's like, no, it
Yeah.
does not have to. Just like learn from my mistakes so that you don't have to waste or go through 3 years and then get to where you want to be. You can
Yeah.
definitely shorten the learning curve just by getting around people that are doing what you want to end up doing, and doing
Exactly.
it consistently and you could trust them and all those good things. Cause then, yeah, if you try to do it by yourself, there's obviously no accountability with yourself. You don't know exactly what you do need to know, what's not really as important. And then no one, like I said, I think the big thing is like accountability of like, if you just keep having these tilt days and no one knows about them, nothing's going to change. You're just going to
Yeah.
convince yourself that you're fine. You're doing things right. Maybe you're not doing things right. You'll never know, until you get
Yeah.
someone else's eyes on your trading to be
100%.
like, hey, I've been through that myself. Like, I'm not surprised that's happening to you, but here's a few ways that I know has fixed many people's approach in that regard. So you got to get around
Yeah.
other people.
Yeah. No, I think that's fantastic advice, honestly. Like a mentor, like a group, anything, just like leveraging the resources around you, so important, especially in the beginning, because like learn from other people's mistakes. You don't have to make them yourself. But
Yeah,
it was a pleasure talking to you, man.
of course.
I hope this was
Appreciate it.
valuable to the viewers. I'm sure it is. Hopefully, we do this again soon.
Yes, sir. We will.
All right.